Okay, we are live. Okay. Okay. So guys, we are live. There was some disturbance. I'm so sorry for that. The volume is high, so I think things gonna work now. Yeah. Awesome. Uh, let's be quick. We wasted like 5-10 minutes. If you can hear me, leave me a quick reply in the chat box. Also, let me know if you're facing some difficulties in terms of uh, I don't know, uh, maybe the audio, the video. I'm getting some notifications though. Let's be quick, guys. If you can hear me, kindly leave me one confirmation in the chat box. Right? Awesome. Okay. Got it. Okay. Yeah, we can get started. The previous live had disturbance. I apologize for that. Okay. Cool. By the way, if you guys face disturbance, it's obviously from my network. I have some technical issues right now, so kindly manage with that. And in this live session, we'll be discussing about uh, swing trades. How do you capture patterns? How do you capture good trades and stuff? And it's going to be fun. And at the same time, before we begin, I also want to let you know that whatever you're going to learn right now, you can implement it in the stock market, even if you're a beginner, right? Because swing trades usually are not that risky if you calculate it properly. At the same time, it isn't too much of a technical stuff. It is more towards fundamentals as well, and it is more towards being very practical in looking at charts, right? Cool, guys. So let me see. It's completely high right now. It's completely high. How about now? Should be much better. Okay, cool, guys. So before we begin, please leave me one last confirmation in the chat box if you can hear me, and we're good to go. Okay. Okay, cool guys. So we can get started. So it is very simple. It's just a concept where you hold a certain trade for a couple of days, maybe a week or two or a month or so, and you have bigger targets, you have bigger stop losses. Now, before we begin on how you can do that, let me tell you one thing, that when you're trading intraday, the stop loss and the target are going to be very less in terms of intraday basis. That's the reason most of the people fail in intraday, because the volatility is really high uh, in any index or in terms of stock which is very renowned. The volatility is high, due to which the chances of your stop loss being hit increases. Now, before we even understand that, okay, I'm still worried that you guys have buffering issues. I'm still worried about that. I hope it's not happening, and I'll keep continuing. If you guys have that, leave me a message, I'll get to know. So I want to reveal something important to you guys today, something really important when it comes to stock trading, which I have understood over time. 95% of the people fail, or whatever the statistics is, 99, 90, whatever it is, a lot of people fail in intraday. They don't fail in stock market. Okay, there's a very big difference. Why they fail in intraday is also another concept to talk on, because whenever you trade, let's say I have a position to take. Okay, let's do it right away. Let's say, what is this? Okay, let's say I have a position to take. Now what you see on the screen is a 15-minute candle time frame. Over here you can get to know that each candle is 15 minutes, and every candle takes 15 minutes to form. So when the market started, it is simple to see that this is my first support, this is my second support. Whenever the market comes down to my third support, I can simply understand that, okay, it's at support, second and third support, so the market has to go up from here. Okay, I'm just making a possible trade entry for you guys right now. So let's say that is my third support and the market has to go up. Now, understanding this concept, keep in mind that whenever the price is rotating at this certain zone, there is a lot of volatility happening which we cannot see on 15 minutes. To be very honest, 15 minutes is also considered volatile. If you go a bit deeper, let's say we talk about 5 minutes, a bit more deeper. Okay, what do you guys see here? We see multiple candles, reacting at a certain zone. That's first, that's second, third, fourth, and so on. Multiple candles. There are 10 candles here, counting from this to this, which are very volatile when it comes to its movement. Now, when you place your target and stop loss, okay, when you place your target and stop loss, considering maybe the next, this is a resistance, so this is going to be my target, and this is going to be my, let's say if this is your entry, your previous thing should be your stop loss. Okay, considering the trade moments, you take an entry somewhere here and you wait for the target to perform. It's hit, you're happy, you book profits, and you're home. If it doesn't hit, it comes down, it hits your stop loss, you're sad, and you close your trade. But whatever movement happens here is very volatile, that your profit, your target or stop loss being hit does not matter at a certain point. Okay. Okay, I request you again to leave me one last confirmation in the chat box if you can hear me. I'm just worried that it's going good. And don't worry, you'll have a lot to learn today. Trust me on that. Please leave me one last confirmation, guys. Guys, let's be quick. issue here. Acha, chalo. I got one confirmation, so I'll continue. Okay. Now, as I said, your target or your stop loss being hit does not matter at all when you're doing intraday. It does not matter. No matter you go to any time frame in intraday, it does not matter. If I'm talking about, let's say 15, 5, 10 minutes or so on, or 1 minute itself. But the point that you need to understand is that at a certain range when you're taking a trade, or this certain range where the price is trading, they are very volatile markets. Okay, they are very volatile because there's a lot of noise in it. That's what I can say, a lot of noise, and this is not an appropriate way to trade. It is not at all an appropriate way to trade. It is true that I place bank nifty trades, I do it on intraday, I make money, I lose money. That is true, I do it, but I personally feel that this is not at all the right way to do things. You can question me that why do I think like that. Now if you look at international markets, for an example, if you look at let's say forex, okay, have you ever seen someone trade forex on a shorter time frame? Okay. Oh, is that so? The messages show up late. Okay, I'm asking you a question. It's okay if you're a newbie or something. Have you ever seen anyone trade in forex on a shorter time frame, excluding India? For an example, you can let me know what is the time frame that people usually look at when they are trading forex. I see the messages are late, so I'll just wait for you guys. I'll repeat the question again. What is the time frame that you have ever seen, the lowest time frame that you have ever seen a forex trader who is, intermediate or something, trade in the market? The lowest time frame that you have ever seen a forex trader who is, intermediate or something, trade in the market. Okay, I just heard myself and I think it's a bit delayed. I understand. Yes, Priyam Raj answers that it's going to be 4 hours, 8 hours, day, weekly, and that is exactly right. The minimum to minimum time frame that any forex trader goes is 4 hours. Now let's not compare forex in Indian markets or any indices or stock market. When it comes to market, the price moves the same, just the time frames are different. So the way we trade Indian markets, the culture which has been followed by retail traders, it is really wrong. Okay, the culture that we follow is really wrong. What we do is we trade in, I'll tell you what, the average time frame that every normal retail trader does is like 5 minutes, 5 to 15 minutes. Some people have more concentration on 15, some people have more on 1 minute, and intermediates are on 5 to 10 or 15 minutes. Why is that is the question. Like, why are we even doing that? We have to look at the market on a larger time frame. We have to understand the overall scenario. But what Indian trader does, I'll be honest, I don't know how foreign markets work. Just take this out. I don't know how foreign market works when it comes to people, retail traders trading in that market. I'm into Indian, I understand Indian. I don't know why we trade at such lower time frames. It has so much of volatility that we cannot literally predict what is going to happen. Now if I'm asking such a question, the issue is with the I just got a message, I'm so sorry. The issue is with the mentality that has been followed, the psychology that has been followed. Okay, no, I cannot join my own thing. I'm already working on a hotspot. I have some internet issues. Okay, but the answer was right. That the psychology that we have been followed is very wrong. It's literally wrong. I can prove it to you. whenever, just try to remember the very first time that you were introduced to the Indian markets. Just try to remember, okay? Go into the flashback or something. When you were very first introduced by whoever it is, social media, friends, family, whatever it is, when they introduced you, did they introduce you to, let's say, a 4-hour market or a 3-hour market on intraday or whatever it is? Did they introduce you there? The answer is no. They directly introduced you, like whenever you got introduced to this, it was 15 minutes. I'm 100% sure it is 15 minutes. If not, it is 5 minutes. If not, it is 1 minute. That's all. That is the major issue. Now, how do we counter it? What's the solution? Like, what is the possible solution that we have to undertake to, fall into this trap? Now, it's a complete trap, guys. I'm telling you. It is, this psychology concept has been followed from ages, from 1970s to 1980s, when the market started, booming in India. That is when slowly the concept, this psychology was introduced, and it is still being followed. You won't believe me, when I trade in markets, I have to trade in even I do trade in lesser time frame. When I trade, I somewhere feel I'm not a intraday trader. I'm an option trader. You have to be that quick, and it doesn't make sense at a certain point. So that is the problem. That is why most of the people fail. Now, if this is the problem, if most of the people fail, who are the ones that is making money is the question, right? If we are failing, if retail traders are failing, then who is making money? Are the big players making money? Are the people who are retail but they have huge capital to invest, are they making money? No, the answer is no. If I'm talking about stock market, big institutes like FIIs, DIIs, they make the majority money. Retail traders fail all the single time. FIIs and DIIs are the one who make money. Okay, the answer is simple. Why? Because first point is they have good capital, or I can say, to be very particular, they have huge capital. Second, they concentrate on larger time frames. Can you even imagine a person sitting on or a person handling accounts of FIIs, these institutes? Do you really think they come down to 15 minutes? They know they draw trend lines like this. Looking at that, they take their decisions. Do you think that? If you do, that's wrong. So what is the method they follow is very simple. They don't look at trend lines. They look at zones, I can say. They look at the overall story of the market, I can say. Right, I'm just looking at your answers. Okay, nothing special. Okay, so the first thing is they try to look at the overall story. Now, what is an overall story? That you identify on larger time frames. Simple as that, nothing of a rocket science here. Now let's go to 2 hours to understand what is happening. Or let's say, yeah, 2 hours is fine. Let's go to 2 hours. Now let's try to understand. In 2 hours, let's try to be like a person who is handling the accounts of FIIs, right? After all, they all are humans. No god is handling their account. Every single person who's sitting on a good PC and trading is a human, right? So let's try to behave like that for a second, for a minute. If I was in a certain situation, or anybody would be there, they would try to analyze zones. Now, what are zones? Zones are support and resistance. Simple. Now, let's simply mark the support and resistance. Okay, we got that. Let's consider this because the market has been trading here from a long time. The resistance I can see is that. The support I can see is this. Simple as that. Right? Now, let me ask you one question here, that listen to this carefully, and I want everyone to answer this. One question here. This is the first touch in the zone. second touch in the zone, let's call it a touch, third touch, fourth touch, fifth, sixth, seventh. Now it's going to be one more touch, which let's not talk about that. Now if I ask you, okay, now if I ask you, that's the first, second, so the market was down, it went here, all this happened, now it's here. What do you think is the next move that market is going to do? What do you think is the next move that market is going to do? Look at the positions properly and then answer this question. If you're thinking that it can be anything, the market can fall or market can go up, it can be anything. That's what if you think is the answer, then it's wrong. And also, all this that we are discussing, you cannot use it directly on 15 minutes and stuff. I'm gonna also tell you where you have to use it. Okay, let everyone answer it, guys. Let's give a chance to everyone to answer this. I'm gonna wait for you guys to reply. Okay, I'll just open this. Okay, I'm gonna set a time 20 seconds. I'm gonna wait for maybe 10-15 seconds, whatever. Okay, cool. Now okay, awesome. So the question was, market gave you a certain moment, came here, bounce, 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 bounce. Right now it is here. What do you think will happen at this moment is the question. Now if you try to understand this very carefully, you can get to know that, let's go to 1 hour to make it much more simpler. Okay, you can get to know that, you know, the market when it came to this touch, when it came here, did you see that heavy buying, I can say behavior, heavy buying behavior that is happening here? Heavy buying behavior. The sellers didn't even have a chance to place a red candle here like this. They didn't even have a chance to place a red candle here. Simple as that. So the buying pressure is really high is what you need to understand at this situation. And whatever happens at this point, okay, at the end of the day, whatever happens at this point or at the end of the week or this trend, the market has to touch up. Okay, the market has to touch up if I'm talking about this certain zone. Now what can be the second scenario? Because we cannot just sit on one scenario and trade. Market has to go up or down. There are two cases at a certain time, or all time. Now if you look carefully, every candle which is formed here, no candle has closed near your zone. Okay, every candle which is formed here, no candle has closed here. Whenever it came here, it was pushed back high. The second case scenario is the market can come down till here, form your candle or form a red candle here, and then it can push high. Okay, it can form a red candle and then it can push high because the closing was not done over here. Let's say, let's move this. Okay, the closing was not done at this certain point, so the candles can form here or the candles can directly push up to a certain point. Now as a trader, will you take a position at this certain point looking at this scenario? I'll answer it for you guys. as a trader, you should never take a position when the market is at a mid scale. Your positions should always be here, or it should always be here. The people who take positions in the middle are those who are confused themselves that if it's going to go up or go down. What will be the possible case scenario when you know that this is where, when the price came here, it was rejected, 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 then this is the best place to sell. When the price was here, pushed up, pushed up, pushed up, and so on, then this is the best case to buy, right? So when the price came to this zone, let me mark it even more, in a good way. Okay, this is the proper zone that I'm talking about, because that's the closing. So this zone I'm talking about, considering the closing of the candle. When the price came to this zone, and whenever the price is here, it has to push up, and this is the best entry point for your trade when it comes to swing trading. Okay, like this is the best entry point when it comes to swing trading, and I'm not talking about intraday, to be very specific on that. If this was your entry point, expecting that this is a zone that market has been trading from a long time and it has to push up from here, then how is it even hard to understand if this is your entry, that should be your target, right? So let's now try to understand what is the scale. If this was your entry, you would have made like 45 points, the highest 70 points. Okay, the highest it went was 70 points, and to be very honest with you guys, 70 point is very less. It's for bank nifty is very less. I'm sorry, for nifty. For nifty it is more. My bad. For bank nifty it is less, and for nifty 70 points, I'll give you a scale. Okay, if nifty is moving 30 points, that means bank nifty will give you a movement of 100 points. So if nifty is moving, let's say 60 points, bank nifty is moving 300 points. Similarly, if nifty is giving you a movement of 70 points, let's considering this to this, that means comparative to bank nifty, it is somewhere around let's say 350 points. Really good for swing trading. So this is what I'm trying to tell you, that you should always look for zones. Think as an operator, though you have less capital, think as an operator, and that is how you need to take your trades. People who trade in mid, not understanding the zones, is where people fail. Entry and exit points are only made at support and resistance. It is not made anywhere else. Support and resistance, or trends of support and resistance, on a shorter time frame you'll find many, larger time frame you find many, but entry should always be at that certain points. Let me look through your questions. Okay, Musab, I got your question. I'll answer it in the last. Okay, so now whatever concept we discussed is a complete trading setup kind of a concept for swing trades, not for intraday. I'm telling you, swing trades. Now if I tell you that you can use the swing trade analysis, okay, listen to this carefully. If I tell you that you can use the swing trade analysis to take your intraday trades, will that help you at a certain point to make profits? The first thing we discussed is that everybody makes losses in intraday because more volatility, right? But if I tell you, if you can utilize the swing trade concepts that we learned here to trade intraday, will that help you to make profits? Your video is lagging. Kindly manage with that. It's the network issue. Okay, let's be quick, guys. I want it to be very interactive. This is something which is important for every one of you to learn. Okay, trust me, count me on this. You go with to any paid trader, or good people, good names in the market who teach stock, they won't tell you all this. The moment anybody tells you all this, who's selling good courses to a good amount of people, I'll pay you thrice the amount of his course. That is an open challenge to you guys. Any single trader who's there, you know to sell courses online, who, let's say, who's getting more courses, who's getting more students, if he's teaching you all these concepts, then I will pay you the thrice of his amount, because I know it's not how the way it works when it comes to their business, right? uh, because I know. Guys, leave me a last confirmation, I mean a message in the chat box if you guys can hear me properly. Guys, give me a confirmation in the chat box if you can hear me properly. Okay. Okay, got it. Awesome. So I'll continue. If you guys are facing lag, just hold on for a few seconds, it'll be solved. Okay, let's not get things disturbed. Cool. So the question was, how can you utilize the analysis of a swing trade to trade intraday? It's very simple. You don't have to do anything. The only problem, okay, I think you guys will relate to it. If you're trading, you'll relate to it. A problem for a trader is the psychology, guys. The psychology is the main problem. I'll tell you how can you find that out, if you have that problem or not. If you're trading in the market, you buy one share, you buy 10, 100,000, doesn't matter. If you're trading in the market, you open your phone, laptop, computer, whatever it is, and you start watching your market. Okay, when you start watching your market, you will see tons of opportunities, tens of hundreds of opportunities to take a trade. Okay, you will see tens of hundreds of opportunity to press that buy sell button for the first time for the day, for intraday. So when you start watching market, how long does it take for you to take a trade? When you very first look at a chart, average, I can say, if an average person or a trader is trading, it will not even take him 5 to 10 minutes. You can count me in like that. That is the problem. The psychology is the problem. As soon as we start watching the charts, we want to take a trade, we want that money flowing in, we want to bank on it. And you need to understand that it's all a trap. Okay, this game is all about trapping others. I'm telling you, this game is all about trapping others. The money you make today is the money someone lost that day. Same, vice versa. The money you lose are the money that big people make, which is the ideas, big institutes, to be very honest. It's all about how good you trap the other person in the market. Now, this might sound rude. This might sound very rude if I tell you that, it's a game of trapping people. But that is the reality. That is exactly the reality. People who lose, the money that people lose are the money that you might earn someday, but the money you lose are the money that is earned by big people. It's just like that. So how can you get out of these situations is the question. So what you need to do is very simple. This concept that I'm telling you right now is gonna literally reduce your risk, your wins and loss ratios to very less. Your losses will be decreased completely. How is that? Is go to 1 hour time frame. Okay, I'm going to tell you a strategy now. Go to 1 hour time frame, start drawing your charts, try to analyze zones, try to do trend line analysis, anything that you feel is right. I can see that's a trend line being formed here. I can see that obviously this is a zone, so you don't have more trend lines here. That's a trend line being formed there. Okay, whatever it is, and try to draw your support and resistance. When you do that, you only need to take a trade when you see the price is coming to your support and resistance on 1 hour time frame. Okay, you only need to take a trade when you see that your price is coming to the 1 hour time frame. When you do that, at this moment, before the market came down to this level, it was simple to understand that this is the first touch, that's the second touch, and that's the third touch. When the market came here, that is when your trade needs to execute, understanding that that's support, support, and support. But the point is, how do you do that? Should you do intraday? Should you do swing? For swing, you need big capital, no leverage, full cash you have to pay for the lots, you have to pay full premium. That's not possible, right? So you have to do one thing, that when it comes to stop loss, you have to understand what is the possible stop loss. Now if this is the best case scenario, that's my possible stop loss, right? Simple to understand, that's my possible stop loss if I'm taking my entry somewhere here. Let's say if this is going to be my entry considering the support, that should be my stop loss. Why? Because that is the previous closing on a lower base, and that is where the resistance, the next support is. So the market will definitely touch that. So this is where my stop loss should be. But your target, okay, your target should be on your intraday basis. Your target should be on your intraday basis. Now what is happening? Your stop loss is based on your swing trade analysis, but your target is based on your intraday analysis. That means simple, that your losses, the losses that you're going to take is going to be big, but the profit that you make is going to be small. So over here we are like 28 is a stop loss and 25 is a target. You can increase till here as well if needed. So eventually when you look at multiple setups, you will get to know that stop loss ratio is going to be huge and target is less. So RR ratio fails over here. So when the RR ratio fails and you share this with people, they'll say that it's a bad deal to go with and you won't make money because the RR is not good. It's all bullshit. The RR should be good is not compulsory, right? So let's get down to what it was. Do your analysis on 1 hour. When the price is coming to your entry point, which is your support, that is when your entry should be, and your stop loss should be big. It should be big according to the swing trade, and then your target should be according to your intraday. So this should be your trading setup when the price came here. For intraday, I'm telling you. If you're doing it for the same swing trade, then this should be your trading. This should be your entry point for swing trade. If you're going full on with capital, that should be your target. 95 points and 45 points as a stop loss. It's a good ratio for swing trade, right? No, you if you're going with smaller time frame, that is when you have to look for the targets. If you're looking for stop loss, go with 1 hour. Go with 1 hour, 2 hour, 3 hours according to the market movements. If it's more volatility, go higher, much higher. Less movement volatility, go lower, like 1 hour. So do your analysis on 1 hour. take your entry according to 1 hour, keep your targets according to intraday, which is 15 minutes, but your stop loss should be according to 1 hour. This will eventually help you to avoid unnecessary stop loss being hit due to volatility, and that is the major problem. Okay, this will eventually reduce your stop loss being hit due to volatility. So now if you're doing intraday on analyzing the swing charts, you will also get full leverage. Now if I'm taking an entry position here, I will go full on with my risk analysis that I can take. Maybe I can go 2 lot, 3 lot or 4 lot, whatever it is. According to that, I can expect good profit even on intraday basis, but my loss is going to be more, accepting that it's a swing trade analysis. So the chances of my stop loss being hit are very less, but the day it hits, it's going to be more. That is the overall concept. The chances are going to be less, but the day it hits, it's going to be more. That is the sacrifice that we are doing to capture good points. So did you guys understand the strategy or the mindset that I can say? Did you guys understand the strategy or the mindset? Let's be quick. यार चार्ट्स भी स्लो हो रहे हैं मेरे. Also, another thing is that see whatever you learn online, okay, मेरे sessions हो, बाकी sessions हो, जो भी है, आप कहाँ से कुछ भी सीखते हो, when it comes to in trading, until you don't apply it, until you practically don't experience it, it's of no use. And whatever you're learning right now is of no use unless and until you apply it. ठीक है? Trading is a business, guys. It's not gambling. You take a trade, you risk your money for the opportunity that you're getting out of it. Simple as that. You pay your money to get an opportunity. अगर आप नहीं करोगे तो कोई और करेगा. Now it's up to you how good you are at catching an opportunity. That's all. It's like, in simple case scenario, it's like the big people, the institutional traders, they're fishing on in a pond basically. The big people are fishing in a pond, and they have that big what do you call the stick that you use to catch fishes? I don't know what it's called. So you have that tons of being laid around in the pond, and they have small pieces of hook which is attached to the food. Okay, the fish is trying to eat the food, so all those fishes are you guys, and the people who throw that stick with that hook on the food in that are big institutional traders. So when you try to go take that food from that hook which is being attached, is when you get trapped in it. So you need to be smart enough to identify the right hook where you can get the food out of that hook. Right? It's all about a story, it's all about a psychology. Money is in the market. It is not a money that has just appeared. It is somebody's money, big or small. So you just need to know how to capture that fishing rod, yeah, whatever. So you just know how to capture that. If you are going for a wrong hook that's gonna get you held, then that is when you make losses. But if you're going with the right hook with the right analysis on a larger time frame that we just learned, your chances of being hooked reduces a lot. Right? So that was what I wanted to throw away today. to give away today. So I hope you guys have understood that. Right, so that's it for today, guys. I got few meetings to do now, so yeah, that's it for today. I hope you guys have learned something new, and kindly like the video. I know it's not gonna do anything much, but like the video. Kindly share my channel with your network. It'll help me grow, and yeah, we can educate more people, right? So have a great evening. Bye bye.